Hello, everyone. Welcome to Trading Tech Talk. My name is Daniel Sinek, and I will be your host today. It is 6 p.m. Eastern on June 16th, 2022. And we do have an exciting lineup of topics prepared for you today. We're going to look at our tool Portfolio Architect, which will allow you to optimize and balance your trading portfolio. And we are also going to look how our very own swing trading portfolio performed during the last week, which will be covered by Rainer. But before we get started, just a bit of housekeeping. As you know, trading is risky and it may cause substantial risk and loss, and you may even lose more than your initial capital. When you trade, only trade with risk capital, which, should you lose it, will not impact your lifestyle. When it comes to hypothetical performance or backtest results, keep in mind that these are not necessarily indicative of future performance. Now, what's new at tradingindicators.com? Well, we have released today a new version of Portfolio Architect. And this new version contains a few new options, such as the manual import of your trading performance. What this means, I will cover in just a second. We also cover or support a few more platforms from which you can import from, and the overall performance in terms of loading speed and calculation speed has also been improved in this new version of Portfolio Architect. Now, you may wonder, wow, what is Portfolio Architect? The answer is, it is one of our standalone tools. What does this mean? It means it is not based on an existing trading platform such as Thinkorswim or NinjaTrader or ModifWave. It is a tool which you download from our online store and install it on your Windows machine. Once installed, this tool will allow you to perform an in-depth portfolio analysis with the objective to optimize and balance your trading portfolio. Who should use Portfolio Architect? Well, basically anyone who is interested in managing their investment or trading portfolio to get better results. Because what this tool will allow you to do very effectively is to find bottlenecks in your trading. Perhaps areas in your trading where you could improve your trading further, or we should skip trading altogether. It will also allow you to find areas in your trading, for example, seasonal effects, which will help you perhaps to focus your efforts on. You may even discover that maybe for your trading strategy, trading during the summer is not beneficial, and you should focus on the other seasons. All these things can be discovered with Portfolio Architect. So how can this tool help you improve your trading? It will first of all allow you to analyze your current trading portfolio. Once the analysis is done, it will help you to optimize it. As mentioned before, it will help you to find areas of improvements or areas where your trading works really nicely and where you probably should focus on. It will also allow you to combine several of your trading strategies into an overall portfolio to see what is the portfolio effect of running all these strategies together. And then it will allow you to balance your strategies to make sure that one strategy does not overpower the other and so forth. There are primarily two ways to use this tool. The first one is if you are an automated trader, meaning that you have your own automated strategies. We have built some of these in our previous tech talks. Then you can simply use the back test results of your trading platform and import these into the tool. And the tool will then analyze the trade performance and show you where or how well these trading strategies have performed. But there's a second way. If you are a manual trader, and I believe most of you are probably manual trader, you can also use Portfolio Architect because it will allow you to import your own trade performance into the tool and to look for areas of improvement. Portfolio Architect has a bunch of awesome features. First of all, it is very easy to use, and I will demo this to you today. Most of the things that can be done in Portfolio Architect can be done via drag and drop. It supports multiple trading portfolios, and for each portfolio, you can view various performance metrics, starting from number of trades taken, profit factor, net profit, and so forth. It includes charting, for example, an equity chart or a drawdown chart, and you can view periodic and seasonal returns. But these are just some of the main features of Portfolio Architect. Some of the more advanced features are, for example, compounding. What if I was to reinvest my gains into my portfolio? How would this improve my results or perhaps make it worse? You can weigh your strategies, making sure that one does not overpower the other to arrive at a very balanced portfolio. You can simulate effects of disbursement, meaning what if I wanted to take out some money from my portfolio every once in a while? And you can use filtering. For example, what would happen if I only focus my trading on fall or maybe on the winter months and skip summer and spring altogether? And these are just some examples of the advanced features which are possible with Portfolio Architect. If you are an automated trader, you can import backtest results from all these platforms: MetaTrader 4 and 5, TradeStation, NinjaTrader, MetaStock, Thinkorswim, and also ModivWave. If you are a manual trader, you can import your trade results, your own trade results, as a CSV file into Portfolio Architect. And we have prepared a template for you, which I will show you today how this is possible. So whether you're an automated trader or a manual trader, you will be able to take advantage of Portfolio Architect. Now, enough talking and enough theory. Let's have a look at the tool itself. So when you first open Portfolio Architect, it may look like this. So it comes with a sample project, which I have loaded here too, just to demo you the main areas of the tool. On the left-hand side, you have a list of your trading portfolios, starting with your master portfolio, which will contain all your trading strategies. In this left quadrant here, you have a list of the symbols that you are currently trading, including the historical performance of these symbols being traded. So for example, in your portfolio, you may trade Google, and you can see here that trading Google had 106 trades in the past 7-8 years, with a net profit of $34,000 and a profit factor of 1.33 and a drawdown of 15.51. And of course, you may not only trade Google, you may trade a whole bucket of stocks, and all these are listed in this window here. And basically, what Portfolio Architect allows you to do, it will basically combine the performance of all these individual symbols together and simulate a portfolio performance for trading all of these at the same time. And the portfolio effect of trading all these symbols can be seen down here. In this case, we can look at the equity graph, which basically simulates the portfolio performance from a starting equity. In this case, it's $100,000, but of course, this can be customized. And we can see here how our starting equity has increased over the years up until the end date of our sample portfolio. We can also look at drawdown. For example, we can see here that our maximum drawdown in this case was roughly 10%, as you can see here, and we can see how our drawdown evolved, decreased, and increased over time. We can look at yearly returns, so how much returns or gains did I get year by year for this trading portfolio, and we can also look at monthly returns. On the top right corner, we can look at trading statistics. For example, we can see what is the net profit of trading all these symbols together. In this case, it would have been $256,000. What is the profit factor? What is the drawdown in percent? We already knew this from the graph right here. We have the number, it's 10.09%. What is the drawdown in dollars? $38,000. How many trades were taken? 1,080. How many of these trades were winners? How many of these were losers? And so forth. If you go to the return tab here, we can see what was the average monthly return and average yearly return. And the distribution tab will show you what's the characteristics of the trades being taken. For example, the average trade size or the average trade gained $337. The average winning trade was $1,453, whereas the average losing trade was $764. You can see the ratios of winners versus losers. How many consecutive winners did I have? Consecutive losers, and so forth. And now to my favorite part, which is the quadrant up here or down here. Here we can see seasonality effects. For example, in which month, year after year, did I have my best or my worst performance? And here we can see, for some reason, for this particular portfolio, August trading did not work out for us at all. It was the only negative month. Whereas trading in January or December, like basically in winter, worked really well. We can also look at weekday performance. And here we can see that for some reason, for this portfolio, trading on Wednesdays or Thursdays turned out to be very profitable, whereas Tuesdays only marginally profitable. And we can look at ratios between long and short trades as well. What's really cool is once you see these seasonality effects, you can apply filters to your overall portfolio. For example, what if I skip trading in July, August, and September altogether? We can simulate this using the tool. All we need to do is to go to properties up here. We go to filters, and here, for example, you can say that, well, I want to trade in January, February, March, April, May, June, July, but I want to skip August, September, or October, and then resume in November and December. So I select all these, I click OK. Once you do this, everything in the tool will update accordingly. So now we can see, for example, that if I go back to equity here, that our equity would have evolved like this. Our net profit would have been $233,000 with a profit factor of 1.68. But let's apply another filter. Let's look at the weekdays. So for example, let's skip Mondays and Tuesdays and only trades Wednesdays and Thursdays and skip Fridays again. Let's see how the performance would change if we apply this filter. So I go to properties and I use a weekday filter in this case. So I'm going to only trade on Wednesdays and Thursdays, but I will not trade Mondays, Tuesdays, Fridays, and of course not on the weekend. By the way, we have included Sunday and Saturday here as well because of crypto trading, which is 24/7. So I click OK and observe these numbers. They will all update immediately. So now my profit factor has actually increased to 2.16. I would have made a net profit of $155,000 with 359 trades in total. And here's my updated equity graph as well. We can also see that my drawdown using this filter would have decreased to 9.80 from 10.01. We can subdivide our master portfolio into sub-portfolios. For example, maybe I'm only interested to see how Google, Tesla, and Netflix, all these three together, would have performed. And I don't really care about the other ones. Well, very easy. All I need to do is to create a new sub-portfolio here by clicking on the plus sign. That creates new portfolio 4. I can rename it. I call it Google, Netflix, and Tesla. Maybe not the nicest name, but now we have the sub-portfolio. And then all I need to do is to drag over these symbols into the sub-portfolio. That's very fast. I could have also selected all three together, but let me drag them over one by one. Now I can select the sub-portfolio, which not only contains these three strategies, and I see all my performance results only for these three symbols. This is a very easy way to zoom in to a particular symbol in your portfolio to see what are the stats for this symbol, or perhaps a smaller subset of your symbols in your master portfolio. And of course, you can always switch back to your master portfolio to see what is the overall performance. And of course, the filters which I applied previously, for example, we only trade on certain days, these can also be reapplied to this sub-portfolio. And two more things, just to wrap it up. What we can also do is we can change, I'm switching back to our master portfolio, we can change the starting balance of my portfolio. Because as you know, the drawdown, for example, is directly related to my overall balance. The bigger my starting balance, the smaller my drawdown will be. So perhaps, this drawdown is fairly low. Maybe I do not need to start with $100,000 to trade all these strategies together. Perhaps a portfolio starting set of 50,000 would be sufficient. Let's try it out. So I'm going to go up here and I will change my starting balance from 100,000 to 50,000. I click OK. Everything will update. And we can now see that our equity graph here starts from 50,000. So let's have a look at our drawdown, which has now increased to 15.93%, which I believe is still acceptable for most of your traders. So this is a really nice tool to figure out how much money should I have in my portfolio to trade all these strategies and still have an acceptable drawdown. Now, I would like to show you how can you import these trading strategies into your tool. For this, I will switch over to NinjaTrader. So here we have NinjaTrader open, and I open up a chart of Tesla on the daily time frame. And I have also applied to this chart our Super Trend Bullseye indicator and the Super Trend Bullseye trading strategy, which we have built 2 webinars ago. And if you're interested in learning how to build the strategy without any programming knowledge, then please have a look at the recording where we walk you through step by step how you can build an automated strategy based on our super trend bullseye indicator with no programming knowledge needed. Now, as you can see here, trades are being taken by the backtester of NinjaTrader. And since this is an automated strategy, we can look at historical performance. And one way to do this in NinjaTrader is to right-click on the chart. You go to Strategy Performance. You pick the strategy, in this case, Super Trend Bullseye Strategy, and you go to Historical Performance. This will open up a new window, which you can see right here, which shows the historical performance of that trading strategy. We can see an overview here. But what you can also go to is if you click on this drop down, you can go to Trades, which is basically a list of all trades taken by this trading strategy. In NinjaTrader, it is possible to export this list of trades to a CSV file. All you need to do is to right-click inside here, inside this window, you go to Export, you go to a particular folder, and I will give it a name. For example, first of all, you switch over to CSV, and I already have some trades in here. So I will call it Super Trend Tesla 2, and I click OK. Once this is exported, it can be imported into Portfolio Architect. And this is super simple. All you need to do is to go back to Portfolio Architect, and I will open up a brand new project. This opens up a new project, which is completely empty. There's nothing in here yet. And now in order to import the exported file into this tool, you simply go to the location where you imported your file to. All I need to do is to basically drag this file into Portfolio Architect. Okay, so now it is imported, and we can see that it has exactly the same 33 trades, which also NinjaTrader had. But now you can use Portfolio Architect to analyze the performance of Super Trend on Tesla further. Let me quickly switch back to NinjaTrader. You can do this whole thing for multiple symbols to simulate what would be the portfolio effect of trading all these symbols together. So for example, here, I have applied our strategy to Apple, to BA, to Halliburton. I have also used our 1, 2, 3 strike strategy, which we had built 2 weeks ago as well, on Cisco, on PG, on Travelers, on C. And we can import all these trade results into Portfolio Architect. So it is very simple. Once again, you select these trade results and you open up Portfolio Architect, and you simply drag these into the tool. That's it. So now they're imported. And I can do the same thing for our 1, 2, 3 strike trade results. I highlight them and I drag them over into the tool. Done. Now all these strategies have been imported into Portfolio Architect, and I can now do my analysis with the tool for these strategies. So let's have a quick look perhaps at monthly performance. Again, we can see for some reason during the summer months, except for August, trading was not so good. In fact, these were our only losing months. So we could now use a filter to observe how would our trade performance change if we would not trade during these months. So again, I can go to Properties. I go to our filters, and I will say, okay, I only want to trade in January, February, March, April. I will skip May, June, July, August, and September, and resume trading in October, November, and December. I click OK, and you can see your performance updated right away. And here, if you look at the month view, you can see that no trades were taken during the summer months. One more example real quick. I want to show you how you can also import trading strategy results or backtest results from Thinkorswim, just to give you a different taste. So I will switch over to Thinkorswim. Here we have a chart of PG open, and I will apply a trading strategy to this chart. And in this case, it is a 5-minute chart, because in this case, we are going to do day trading. So I will go ahead and apply a trading strategy to this chart. We will use our Hack-Called strategy, which is built into Thinkorswim. And what you can see now is that this strategy will now be step-by-step applied to the chart. And what you can do now is to do a right-click on any of these trades, and you go to Show Report. And this is what Thinkorswim gives you as the trade report, which looks like something generated 30 years ago by some mainframe computer. As you can see, it is very hard to read, and I wouldn't even know where to start to analyze this file. Luckily, however, we can export this file into Portfolio Architect. So all we need to do is to click on Export. We save it again, and I've done this already. And then we switch over to Portfolio Architect, and we simply drag this exported file into Portfolio Architect. Done. But you may be wondering, why should we merge this day trading strategy with all our swing trading strategies? Well, we probably shouldn't. So what we can do is we can create sub-portfolios for these. In order to do this, you simply create a new portfolio here. I will create one for swing trading. I'm going to call it swing trading. And I will drag over all the files that we had for swing trading, which were these, into this portfolio. Okay. And I will create a new portfolio for day trading. And I will do the same thing. I will drag over our called strategy on PG into the day trading folder. And now I can highlight this portfolio, and I can see that, well, now I see the results only for this day trading strategy. And the first thing I see is that, well, I guess for day trading, we really used a small position size in this case because it barely moved the needle on the equity graph. Well, we can change this. So we could either go back to Think or Swim and increase the position size, or be easier, we could simply increase the weight of the strategy, basically multiplying the position size by a certain factor. So I click on weight here. Here I can indicate the multiplier. For example, perhaps 20 times. I want to trade 20 times as big as indicated in the strategy. I click OK. And once done, everything will update. And now it's simulated how would my performance be if I used 20 times the position size as originally reported in that strategy. And remember, this was a day trading strategy. So let's have a look at our hour-to-hour performance. So I will click on hour here, and I see my breakdown for the hours. And what I can see here is that for this strategy, we apply it to a stock. It really didn't go well on the opening hour. We had a losing performance. It worked fairly well from 10 to 11, pretty bad at noon, but then really picked up again in the afternoon. And again, you can apply a filter. What if I only trade the strategy perhaps at 2 p.m. or 3 p.m.? Well, we can simulate this. I go to Properties. I apply my hourly filter. So 2 p.m. and 3 p.m. I click OK. And again, the performance will now update and simulate what would have happened if we only traded the strategy in these 2 hours. And one more thing, if you want to export your strategies and your performance to a more readable file for distribution, for example to PDF, you can easily do this as well. All you need to do is to click on these 3 dots here, and you go to export to either CSV or export to PDF. If you export to PDF, it will also include all these graphs for you, which you can then use for your own records or perhaps for distributions to clients or partners or friends. One last thing, what if you were a manual trader and you do not do back testing, but you still want to use Portfolio Architect? Guess what? It is also very straightforward. We have prepared for you an Excel template, in fact, a CSV template, which looks as follows. It has all the predefined columns which you need to populate with your trade information. In this case, I have entered manually. This normally comes empty. 4 different trades for Netflix. 1 sell trade of 100 stocks, entered at this price, at this date, exited at this time and date, with an exit price of this and a net profit of this. And then we had another trade, a buy trade, then a sell trade, and another buy trade. Then once you're done entering your trade information, you can simply save this file and drag and drop it into Portfolio Architect as well, and then continue with your analysis in Portfolio Architect. If you're interested in giving Portfolio Architect a try, you can take advantage of it. It is on our online store at tradingindicators.com/portfolio. And as with most of our products, we do offer a 7-day money-back guarantee. And for Portfolio Architect, we even offer monthly and lifetime subscription. If you only want to try it for a month, for example, you can use a monthly subscription. But if you're convinced, well, I want to have this tool for life, and I don't want to pay any additional fee or subscription fee afterwards, you can go for the lifetime subscription. simply go to tradingindicators.com/portfolio. I'd like to move on to our second topic of today, which is our 360 bundle portfolio.
So let me show you what happened this week. Once again, it's an exciting week. Last Friday started with the CPI numbers. They weren't very good. And the market just went down last Friday. And that was very, very volatile. We got stopped out of our HAL. And the reason is also very simple. If you look at the way we put our stop loss in, we have 1.5 ATR. And currently, with this kind of volatility, we have sometimes 2-3 times ATR a day, which means the 1.5 is just too small for right now. And that is the main reason why we got stopped out. And then of course, there's a lot of other reasons. But Europe was down, and so far everybody thought, well, the market might be ready to bounce. But in order really to do so, we need to have some big buyers moving in, because unless these big buyers come, the selling is not yet done. The next thing is Monday started again with a down day, and nobody knew were we really at the bottom or not. The VIX was again over 30 and significantly over 30, which is what we call the danger zone. And that is just a lot. The fear factor is very high, and that means there's a lot of volatility. Then we had on Wednesday the FOMC meeting, which of course is always a big thing. When Powell talks, you could always say in the last weeks and months, the market will go down. This time, Powell had really bad news. And the interest rate was increased by 0.75 basis points, which is huge, hasn't happened for the last 28 years. And the market went up. The reason, I'll talk later about this, why the market went up, it was not because we now suddenly in a bullish market. It was more or less that a lot of people sold their puts. They made so much money with their puts that they sold them, and this way the market shot up. So it was really a reaction on what people were doing in the market that were hedging their portfolio. The European economy was really stuttering, and the ECB, the European Central Bank, had called for an emergency meeting in order to cope with the inflation. So what we are really right now seeing is we are in a real stock market roller coaster right now. Is it some people say, oh, we're in a bear market and things are so bad? I wouldn't really say so. I put up here the SPX over the past years. So we see here we had the COVID downturn in 2009, and we were in a long run up. And look at two things here. Look at the orange line and look at this other line here. This is the 50 and this is the 21 exponential moving average. And you see we're still far apart. We haven't crossed. Here is where we crossed it, and then it really went down. So there is still room to run down, but I think it's a little bit different. Also, I love to have the trend radar here. I think this is a great tool that helps a lot to give us an understanding. Look at this bulk on red here and the way it really developed here. Yes, we get in there. It looks a little bit dangerous here, but let's see if it really goes down. If we really go down here more and we get little, similar to these kind of things here, then I would say, then we will really go down further. But right now, I'm still think it's a roller coaster, not necessarily the crash that some people are already talking about. We have a few things that are concerning, but just wait and see right now. And something here, when you look at this here, you can beautifully see how we have our indicators helping us perfectly to be on the right side. We stayed out of the market here because we don't go short. And here you see there's not yet anything decided. It's still not showing anything. And even if the market goes down, the indicator keeps us out of trouble. So we should really trust the indicator here. If there's nothing to show, then we just wait. We don't do anything. Here on the weekly, it's a little bit different because now the time frame is a lot shorter. We still haven't gone down here all the way with the longest time frame and have a complete red, so that's still good. And I told you that the market can go to 3,600. We today at 3,666, so we'll be very close. One more bad day and we will hit the 3,600, which everybody sees as a major support line. And there we expect a bounce, and a lot of people, probably the hedge funds, will move in and buy cheap. And we're looking at our portfolio. We got kicked out of HAL because of the huge swings with $111.39 loss, which is not really bad. The SP futures are currently at 3.7. Actually, they're a little lower right now. The VIX is over 30 consistently. This can really cause erratic and big moves in either direction. That's why we need to be very, very careful. And the market is not ready. And therefore, as a result, we'll just sit on our hands and stay in cash. That means we're not clicking the buy button. We just do nothing. We decide not to trade, which is a great trading decision at that point, okay? Another thing we still have on our list is the Amazon. Amazon had a push up here a couple of days ago. Here it went up again, now it went down again. But, you know, it's very volatile, so we will also sit and don't do anything, sit on our hands. You see here, everything is solid red right now. So they expect even that they will go further down. It really depends how the next days will be. Are we going to hold this level, or are we going to go through and then have another big sell-off? We just don't know yet, okay? Regarding the other stock, we had this one here on our radar. This also went down, and like I said, there is not really anything where we can say this is the reason or not. The indicator says nothing, stay out, don't do anything, and Trend Radar also shows me don't do anything, so stay out of here. It makes no sense to go in something. You can see here on the left side, yesterday, pretty much everything was green because it was moving up. You see that on the big candle here, where I have the mouse right now. And today, pretty much everything is red. So it could be that tomorrow it'll bounce back because they say that was way too much, the correction. We don't know, okay? We'll have to see. I'll keep an eye on it. You can always check the portfolio. I always keep it up to date and put my notes in here, what happened. And this is really something which I think is really, really important. The risk management, that you really follow those rules, because with all this volatility and these market moves, we only lost very little money.
Quick reminder, of course, our next Trading Tech Talk will take place next week, again on Thursday at 6 p.m. And next week's topic will be our portfolio tester for MetaTrader 4 and MetaTrader 5. And we will also demonstrate how seamlessly the portfolio tester integrates with our portfolio architect tool. If you have questions, feedback, please contact us at hj@tradingindicators.com. Alternatively, you can also go to tradingindicators.com, go to the contact form and ask your question on that contact form.